All right, we're going to talk about why we plan to cap our fund, or not cap our fund, but why we plan to stop taking outside capital once our fund reaches 10 million AUM. This is another daily parallel brief. We talk all things investments and finances topics as it relates to our hard money lending fund. We have a hard money lending fund that we lend primarily in Texas, majority in the DFW area, first lien positions, single family homes for the most part. And we've been doing this for several years now. So this is just a parallel brief. We talk all things related to what we do on a day-to-day basis. Not advice by any means. Big disclaimer, right? This is what we do on a day-to-day basis. So recently we've had some growth over these past few years, and our goal as far as AUM goes is to reach 10 million AUM. We think we can do that at the end of the year, but we're on track to do that between a 12-18 month period, as we're getting close to 7 million AUM right now, not including our line of credit that we have with the bank that we can tap in as needed. We have a few reasons why we want to get there. Right now, it fits the current structure we have. We all work remote from each other. I'm in Austin, Texas. I have two other partners, Dallas and Fort Worth, and while they're closer, we still work majority remote, although we do see each other on a monthly basis, but we can support the style and the structure we have at that Number two, I think we can support the deal flow. We still have more deals, quality deals come in than we have capital to lend out to. So if we're just kind of projecting a little bit, I think that number we can still support. And maybe I'm wrong. Maybe when we get to 8 or 9, we have to start marketing and really pushing to get some deal flow in. Or maybe when we get to 10, we still have more deals than capital to lend out to. That's another reason why. Another reason why is the bigger you get, at least for right now, how we run things, the more likely it is that you have to not chase deals, maybe market for deals. The more likely it is that, the bigger funds you get, the more likely you are to maybe feel like you have to force capital to get to work, and you don't want capital to sit in the pockets and dilute investors' returns. And while bigger companies can do that because they have more staff, we're a bit smaller in nature, so the structure isn't there to set up. So if we got bigger, we may have money sitting in our pockets and taking investors' returns down, or we may, be chasing deals we shouldn't be doing because we don't have the bandwidth and the manpower to do that. So that's another reason why we think 10 million is the appropriate number for right now. We could change our mind. We're an evergreen fund, so we get to 10 and be like, hey, we're busting in 2025. We probably have to restructure some things, but as of now, we think we can get to 10, keep the structure how it is, and just grow organically. Once we get to 10, we'll only take capital from current investors as of right now for at least a period of time. Again, we could change our mind, and maybe at some point we do, but for at least right now, that is the plan to get to 10 and to only grow from inside, and to just give boutique service to our current investors that have trusted us and have helped us get to the point that we are in right now. Again, this is another daily parallel brief. We do this every weekday, every workday, right? Every weekday, yeah. So if you like this type of investment content, please consider liking, subscribing, sharing the video. It does help us grow. But just to recap it, we think we have the deal flow to support it. We think we can economically do well, LPs and GPs at that number. We think that it is able to support the different styles of how we lend and how we do business with. We don't have to force deals or chase deals. We can still go about it. And then also something else I failed to mention was the bigger we get, the more staff we have to get, the more kind of finances go towards staff, where maybe it doesn't always make sense to grow just to grow. Now, if we have a certain level we want to get to, then staff makes sense, but we want to make sure the work and energy we're putting in, if we do grow, is going to kind of maximize that yield. So we think we're at a good spot right now. We think we're at a good structure right now. We think we can handle this. We think we have the deal flow to handle it, and we think we can get this out without any investors' returns being diluted by any means or putting it into bad deals. And like I said, we could change, and maybe we will change at some point, but when we get there, at least for a period, we'll pause any capital raising efforts outside the current fund, only take investments from current investors. So if you like this type of investment financial topics, please like, share, subscribe. It helps us grow. We'll see you next time.